Hi, welcome to the market alert for Wednesday, the 28th of August 2019. So, yesterday, silver and gold soar, yields and small caps plunge as trade deal hopes tank. Now, this is the important thing here: is silver and gold they've moved higher lately, as we've seen from this chart. Let me just bring this up for you. The weekly chart of gold. You can see prices have been moving higher since they broke the 200 bar moving average, a bit of a pullback, and since then prices have moved sharply higher. And this is important because if we look at the monthly chart, you will see how the price of gold from 2011 has been suppressed. You can see the 76% retracements here. There's one here and one here, and then prices just fell all the way back, and now they have broken out. And this is a bad sign because when gold prices rise, it indicates that there is a problem, Houston, and we can see that from the yield, which obviously is also mentioned here, where we've got the inversion in yield. So looking in the crystal ball, it doesn't look good going forward. So let's have a look at yesterday's Dow. We'll start off with the daily chart. The market coming back below the 20 bar moving average, trying to trade up to the 76% retracement there, but failing to do so, and then grinding lower. However, in the pre-market session, we have the usual pump. You can see here prices being pumped up once more, and then of course once the cash market opens, it's got somewhere to fall from. So if it dropped in the pre-market session then move lower, the market would be losing twice as much as it's losing at the moment, whereas by pumping the price up in the pre-market session then allows them to see prices move lower once everybody comes to the party. It's a bit like the interest rates, really. They've been moving these higher over the last, since December 2015. They managed to get them to 2%, and now they've got a cushion with which to reduce them, and this is the same that's going on a more of a micro basis. So we had a sell signal here in the Dow just after the open, and prices oscillating a bit before they then broke the 200 bar moving average. Once they broke this, then it was a matter of just moving lower until they found some support, and we got a bit of a bounce before the market closed back to the 200 bar moving average there. So a nice move yesterday on the Dow. It was a bit choppy to begin with, but prices staying below the 20 bar moving average there, and of course not being filled until the second bar here, not on this bar here. This is why the signal remained valid, because the stop hadn't been hit prior to being filled. So that was the move for yesterday. Crude oil inventories today, I don't know why they're still calling this a high news impact news item at all, because nobody's taking any notice. Crude oil is actually moving lower at the moment. I'll just show you a chart, and this is the October NYMEX contract. You can see that prices have been moving lower since they got back through the 200 bar moving average, and more or less remain below that. We had a bit of a drop down beginning of August, a bit of a bounce going on there at the moment, but I should be keeping an eye on the 200 bar moving average, and also on the monthly chart. You can see that we've got prices finding support there, and a bit of head banging in the weekly chart for crude oil there. So a bit weak on this, but it's not going to really make a lot of difference as far as the market's concerned. Meanwhile, in the pound, bit of a bounce as the dollar index is moving lower. Let's have a look at the dollar index for a second. Again, prices move lower and now bouncing back to the upside. The 76% retracement, and then we had a bit of a sell-off there, a bit of a bounce over the last couple of days, but this has assisted the pound with being able to move to the upside, which is what we're seeing here in the daily chart. Back above the 20 bar moving average at the moment. And intraday, you can see yesterday the market started off quiet, and then we had a bit of selling here, and then all of a sudden the buyers came in, as they did here. A bit of a battle going on to begin with. There was buying, then there was selling, then the market tested. That's a nice bar here, which is this bar, and then prices moving higher. They found support at the 200 bar moving average, and then continued higher till the end of the session before prices came back in the US, was in full flow. And then Bitcoin for yesterday, I said it's going a bit quiet, and yesterday was quiet. So you can see they've got a bit of a sideways move going on at the moment. Watch the 98.27. We're still above the $10,000 level at the moment, but when you look at the 4 hour, you can see it's sideways. We've not had another look at the 76% retracement or the 200 bar moving average, so a bit of consolidation going on in this market at the moment. And in the 15 minute, you can see there spike in volume, market coming off the high. There's some selling around, prices move lower. You see how these big volume bars here, prices retrace. Where do they retrace? Well, it's very simple, from this high to this low. Let me just take out extend right. So from this high to this low, back to 76%, and then the market continues lower, taking out the support to the left, but only briefly. Again, you see a bit of an increase in volume here. Prices close back, and then they trade back. You get a pullback, and then back to, you guessed it, the 200 bar moving average. And then we just went into a sideways move there. So there was two small moves, but it's very spiky is the only word I can come up with at the moment. You can see these big spikes, but they do, given in the right places, they do give a good opportunity for a short-term trade. And here we've got the market just coming to life. Even the overnight was quiet in this market, which is in something else. I've not seen that for a while. And again, just eyeballing the chart from the recent high to the recent low, 76% retracement below the 200 bar moving average, and a spike in the volume, and the markets move lower overnight. However, it's now being tested. A bit of selling pressure around at the moment to move higher. So it is a nice market to read. You could just do with a bit more volatility, so that you can have more sustainable trades, because once you look at the 4 hour chart, you realize how sideways this is. And then finally, let's have a look at the yield. This making new records yesterday, minus 0.49. New one for this market. And yeah, it's just getting worse, isn't it, as far as the yield curve is concerned. Let's just see if we can add a data label onto this. So there you go, minus 0.49 for yesterday. And then in the implied volatilities, we've got yesterday 1887, 1866 the day before. So only a marginal increase, given that the market drifted lower yesterday, and that's probably, as I said, helped by the fact that they pumped the market up in the first place. Standing back and having a look at the bigger picture, again you can see that the implied is still red, the market's still below the 20 bar moving average, which means that it remains a bearish market at the moment as far as the implied volatility is concerned. And yeah, that's about it for this one. The only other thing is Deutsche Bank. Let's have a quick look at that. This getting a bit of a bounce yesterday, back above the 20 bar moving average, so no worries about that one at the moment. And the yield curves that continue to invert is in this column here, followed up by the silver medalists, as it were, with partially inverted and then minimally inverted are all of these countries here, which is very interesting. So it seems like they're all sort of making their way over to the gold medal position for inverted yields here. So that's it for this one. No major news today, so the market will no doubt continue its pattern of pump and then move lower, unless Trump tweets, of course, which is always something that we can't account for or legislate for if he does. So we just have to live with that at the moment and trade what we see. Okay, that will do it. Thanks for watching. See you in the next one.